and welcome. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. And I'm Navneet Saluja D'Souza.
Hi, I'm Agam Vakil, and here are the top headlines for this hour. Well, the Nifty consolidates index futures open interest remains little changed, and the India VIX snaps its three-day gaining streak. And open interest in NIIT Technologies and Reliance Capital surges as traders take fresh long positions in their respective futures. Axis Bank is the top Nifty loser today as investors react to its growing NPA pain. And MES Financial lists at a premium of 45% on the exchanges.
All right, let's first address the new kid on the block. Mass Financial, has made an impressive debut on Dalal Street. It's listed at a price of almost 630 rupees. Remember, the issue price for this was 459, so a hefty premium of almost 37 to 40%, which one is seeing on this. The subscriptions were also good for this issue. The total subscription which it received was almost 128.4 times. We'll be getting Shraddha on this, but if I go by the data, the price where it has listed, the price to book is almost at about 9 times. Let me bring in Shraddha into this conversation. Shraddha, what do you think? The listing has been way above. I don't know what the street was estimating, but definitely the subscriptions were good. And the AUM for this NBFC is pretty small, 3,000 to 3,500. Do you think the valuations are too stretched now?
We will ask that to the analyst which comes in. But yes, at the price of 660, the price to book value for this one works out to close to 10 times. So that's actually surpassing even what AU Small Finance Bank had actually seen in the early days of its listing. So one of the most expensive financial services stocks. Just a quick recap about what this company is. It's a Gujarat headquartered NBFC. As many as as much as 58% of its AUM comes from micro enterprise loans. Another 24% comes from the SME loans. So total 80% coming in from those two sectors only. Even if you look at the quick recap of the financial picture, net interest income, net profit and AUM growth have been stellar. Return ratios also very strong, and hence all brokerages had given a buy on this one. And like you spoke, it was not surprising that we had seen an overwhelming response to the IPO. Here, like we were talking about the valuations at about 650, 660, that comes to about 10 times. And I think we can talk to the analyst.
I think we'll be getting the analyst in a while, but the asset quality for this one, if I compare it to the peers, Shraddha, it definitely looks good. GNP is only about 1.1%, but let's just go across to the management and find out what their key takeaways or what their plans are in the coming quarters.
We firmly believe that concentration of risk is far less a risk than spreading it too thin. So if you say 85% of our business comes from Gujarat and Maharashtra, and we have kept the powder dry for our future growth in terms of our expansion in other 4 states, that is Rajasthan, MP in the west, and Tamil Nadu and Karnataka in the south.
Also, Mr. Gandhi, could you explain us why the share of two-wheeler loans has fallen dramatically since fiscal year 2013?
See, that is the advantage of being a multi-product company, that you can allocate your capital and financial allocation in the way which stands the litmus test of balance. If you say that we have always believed in striking the balance between the growth, profitability and the ROEs we generate for our shareholders. So as far as SME and MEL is concerned, we find more opportunity in allocating our financial assets there, financial allocation there as compared to two-wheelers and commercial vehicle. Having said that, with our geographical expansion, that assets will also start growing.
Also, how do you see your AUM mix then changing in the coming years? Because most of the loans are concentrated or are micro enterprise loans in small and medium sectors.
If I tell you that MEL and SME is our specialty, and that's a huge market, but I must share with you as a practitioner that they're very high entry barriers. So MEL and SME will grow above average, whereas two-wheeler, commercial vehicle, and we have recently started used cars also, will grow below average if we are talking about a growth of anywhere between 25 to 35%.
Also, with the goods and services tax and with demonetization, the unorganized sector and the SME sector was the one that was really the worst affected. So how did that impact your asset quality, and how do you see the gross NPA moving in that case?
See, our June numbers are already published and they are on our website. And if you see the quality of the portfolio, what we have maintained despite of all these things. And pre-IPO also I've shared with number of investors and number of channels that the stress is the time of the fundamental of the credit assessment you do. And I take pride in telling you that we work with wonderful set of entrepreneurs that despite of all the problems, they are in a position to manage their finances in such a manner that they don't default. And as far as their mass is concerned, we have been in a position to maintain our loss given default within the permissible limits.
Also, since the net interest margins have also been on a falling trajectory, going forward, what will be your outlook for assets under management and on the margins?
See, the right way of looking at it is when we decide any product, the right way of putting it is that what will be the ROS that will be generating. Because net interest margin, after net interest margin, there will be operational cost and then you will be left with NPMs and then the ROS. So if you say that over the years we have tried to be more and more competitive, reduce the cost of borrowings for our clients, reduce the operational cost, maintain the credit cost, maintain reasonable NIMs and maintain constant ROS. So going forward, it will be our endeavors to maintain ROS, reduce our borrowing cost and hence pass on that benefit to the borrowers, reduce our operational cost, maintain our credit cost, and at the end of the day maintain our ROS despite of being very competitive in the market.
So where do you see your margins and AUMs in the next 1 year or 2 years, if you have to say? Really?
I think we will be maintaining our ROS in terms of balance sheet anywhere between 3.25 to 3.5%.
All right, we also have Digant Haria from Antique Broking who's joining us. Thank you for being here. Digant, at the listing price of 660 and a valuation of about 10 times FY17 price to book value, just how rational or irrational this valuation is, and is the street really ignoring all the associated risks? What's your call on the stock at this level?
Firstly, see, for financials, it may not be prudent to look at trailing book, especially when there has been a capital raise. So Mars has had a very successful capital raise. So let's just look at the numbers after this capital raise, successful capital raise has been completed. So our calculation is that the book value will be close to $130 for FY18 and around $150 for FY19. So on these numbers, the stock trades at close to 4.1, 4.2 times on FY19. So while this is at a little bit of premium compared to other companies in similar space like Shriram City Union or Capital First, I think this premium is right now largely due to the fact that Mars Financial has a smaller book size and can probably grow at a much faster rate than what a Shriram or a Capital First could. But yeah, having said that, I think at 4 times, at 4.2 times, obviously, building in upside currently is definitely out of question. And I think investor year will have to wait for, few quarters or maybe even years to get meaningful upside, because obviously Mars has done very well till now. But, to scale up from a loan book of 3,000 crores to say 5, 6, 7,000 crores will be a slightly different ball game. It will involve doing a lot more of retail lending rather than the institutional lending which Mars has always done. So I think, yes, there are challenges at this price. If an investor has to get in, he has to be very, very careful in evaluating these risks that, when you enter new geographies, new products, when you go directly retail, it may not be very, very easy, because you also have competition coming in from a lot of these small banks, which were erstwhile microfinance companies. They are trying to scale up and they are trying to enter the MSME, two-wheeler and these spaces. So it's obviously an interesting space, but there definitely are risks at the valuation.
Digant, all right. So at these levels, isn't say a Bajaj Finance, for example, which is similarly placed in terms of the growth profile and return ratio profile, slightly probably expensive on the valuation bit, but given this larger size, aren't investors better placed to be invested in a Bajaj Finance right now versus a Mass Financial?
Right, so see, an investor has to take its own call. See, Bajaj Finance will be trading at close to 6 times on FY19. Mars is trading at 4 times. So valuation-wise, obviously Bajaj Finance is far more expensive. But yeah, it is 20 times the size of Mars Financial, and it has proved the continuous execution over last 5 years. So I think, everything in this space is expensive because market is pricing in growth. And growth is scarce elsewhere. So these NBFCs are the space where there is a lot of growth. So I think investors can choose and pick whatever they're comfortable with. So I think we particularly have a hold rating on Bajaj Finance also because we think that stock is also priced to perfection, and same with Mass Financial. But I think with years to come as they execute, there will still be some returns which will be made.
All right, thank you so much for joining us with your thoughts, Digant. Broadly, expensive valuations, yes, but probably the street is pricing in the growth potential. Back to you guys.
All right, Shraddha, thanks a lot for joining us. It's been a successful listing, so to say, for Mass Financial. But let's focus on the futures and options market, and let's see if we can spot any trends, because yesterday was all about consolidation for markets. But today it's been a weak start owing to the weakness seen for Bank Nifty. Remember, today is the weekly options expiry day as well. It's usually on a Thursday, but tomorrow being a market holiday, you're seeing the expiry coming today. So as of now, Nifty slipped below the 10,200 mark. The only thing I will be watching out by the end of the day is whether Nifty can manage to close for the third straight day above the 10,200 mark. So that remains key. The VIX, the volatility has cooled off a bit in today's session. In terms of strikes as well, we've seen some sort of unwinding coming for put strike. For example, 10,200. Now that's the strike which was adding a lot of open interest addition in the past few sessions. And so far in today's session, 10,200, 10,250 as well as the 10,300 call strikes have seen some sort of open interest addition. Where can the Bank Nifty weekly options expiry take place today? Well, it looks like it could be in that range of 24,200 to about 24,600 on the upside, as there has been a lot of call writing coming in for out of the money options.
Well, usual suspects for counters which are gaining in open interest. Let's also take a look at that list. Of course, Reliance Capital among many does figure in that list. We also have Hexaware Technologies, which has picked up in trade substantially. We've had some moves in the likes of NIT Technologies, Just Dial, and Axis Bank. Axis Bank, of course, is looking at an 8.5% increase in open interest, while its stock is down near 6-7%. So there is a lot of short build up as far as Axis Bank goes. Hexaware Technologies, on the other hand, a 16% increase in OI, but the stock itself has only moved up by as much as 0.7%. Reliance Capital, of course, one of the suspects which is likely to go back into the F&O ban after it moved out of it yesterday. We'll have to wait and watch, but currently, given the fact that we've seen a near 11% increase there, well, there is a chance that it just may move back into the ban. Let's also take a look at some of the stocks which are looking at unwinding in open interest. BEML stands out, of course. Power Grid, Nalco, Tata Chemicals, and Biocon. BEML did move back in, and but this is not enough for it to come out. We'll keep an eye on that one. But moving in, I do want to pull up NIT Technologies. Now, we're expecting earnings today, and we have seen a surge in open interest over the last 3 days. We have seen the stock move up by nearly 8% over the last 5 days, and the stock is buzzing. It certainly is. The underlying is up only 1.5%, but its open interest has moved up from the levels around 80,000 shares to well over 90 for now. And this is quite likely on account of its earnings, which will be coming during market hours. So we'll be watching out for that as well, Navneet.
Well, clearly, NIT has been seeing some sort of fresh long build-up in the past few sessions, as you rightly mentioned. On that note, let's welcome our F&O experts for the day. Gaurav Bisa, Derivatives Analyst at LKP Securities, and Navneet Daga, Head of Derivatives at II Wealth, joins us on the show now. Good morning to both of you, gentlemen, and wishing both of you a very happy Diwali and a prosperous New Year. Let me first go across to Gaurav. Gaurav, do you see any sort of correction to come by? Yesterday was a day of consolidation. Today, owing to the correction in Bank Nifty, we are seeing some sort of weakness coming in for Nifty as well. Is it just another day for consolidation, or the markets could trend lower from here?
Good morning. The Nifty, for that matter, it's at a very crucial juncture. 10,200 is a very crucial level for the reason that we saw a significant writing happening in 10,200 put option for last 2 or 3 days. And now if it sustains below 10,200, there will be some sort of short covering in the put set that we can see, and it can slip towards 10,100. So the ideal trade for the Nifty would be buy about 10,210, 10,200 with a stop loss of 10,165. Upside targets of 10,270, 275 in a day or two can be seen. For Bank Nifty, there's a strong positions at 24,450, 24,500. A lot of call writing happening at those levels. Buy about 24,450. A short covering rally in Bank Nifty in the option side can edit towards 24,800, 24,850. So buy a little bit higher so that you can catch the trend in a proper way.
Happy Diwali to you too, Navneet. How are you viewing trade on the benchmark indices as we move into a bunch of holidays and trade next week?
Well, hi. Happy Diwali to you and your viewers as well. To our understanding, look, the markets, before making any fresh dash on the higher side, it would be a time whereby we consolidate these gains and digest these gains that we have made. And this is a view that we have shared with you the last week as well, that we believe that somewhere near to 10,200 levels, the markets are likely to take us somewhat of a halt on the spot level, and we are likely to digest these gains. So our view is basically standing the same. Until we see Bank Nifty underperformance getting capped on the lower side, we are not likely to see any major fresh highs on the Nifty is what our view is basically, because almost 1/3 of the weight of index is the banking stocks, and it's unlikely that we might see an outperformance in the likes of HUL, Reliance continue in the same fashion that they are seeing. So we are betting more on the consolidation, but I would trend a bit lower on at this point of time. It looked like that we might see a somewhat of more profit taking coming into this on Nifty as well. Somewhere near to 10,150 is what we are eyeing at as an entry point for the market.
All right, that's the view coming in on markets. Let's switch focus and talk about the options corner now. Well, for the day, Navneet Daga has a short straddle call, but before that, let's see what a short straddle actually means. A short straddle is when one sells at the money calls as well as puts in anticipation of some sort of decrease in the volatility to come by, and when the volatility actually decreases followed by contraction in option premium, the strategy becomes profitable. Navneet, over to you. Take us through your option strategy for the day.
Look, as we discussed that we are having a bit more of a consolidation view on the banks as well as on the Nifty as well. So at this point of time, going into the truncated week within holiday week, it's looking likely that it's a better trade to be on the short straddle kind of a trade, whereby you are eating the premium available in the market because of the high volatility. So I'm selling at 24,500 call and put options for the weekly monthly expiry, that is 26th of October. The current spread is somewhere in the range of 355 to 375 depending on where the entry point is. I'll place a stop loss of 460 on the total spread, and I believe that the markets are likely, the Bank Nifty particularly likely to be hover near 24,500 for the next week or so, whereby the combined open interest is almost 25 lakh shares on that particular strike, looking likely that becomes a pain point for that expiry level. So that trade can work out well with a target of 140 to 200 on the spread.
Okay, so Navneet is going short straddle on the Bank Nifty, but Gaurav, how about you? You are initiating a buy call on one of the Nifty calls for that matter.
Well, as I said, the Nifty has a strong support at 10,150, 10,170, and we have seen good amount of OI addition happening in last 2 or 3 days. Today, it's the start of a extended holiday, so there's a possibility that the participation would be less, the volatility component would be quite high, and this might not be a proper data or proper data point to take a view. The earlier view of bullishness being continued, I still stick to that, and I would rather buy a little bit higher levels, as I said, about 10,200, 10,210, with a stop loss of 10,165, 170. One can buy a Nifty index for targets of 10,270 to 10,290.
All right, so Gaurav's watching out for the target of 10,270 on Nifty. Well, it's that time of the show when we address a couple of our viewer queries, and our viewers have written to us on social media. Let me take the first query that comes from Dinesh Kumar. Dinesh says he's long on one lot of BPCL October futures at a price of rupees 499. He wants to know what should he do. Well, clearly the oil marketing companies have been doing well, and let's just check where the BPCL October futures are trading currently, since he's bought at 499. So he's pretty much in the money at levels of about 516. Navneet, do you think he should book profits here?
Uh, if I understood wrong, it's a BPCL, right?
Right, it is BPCL. Yes, Navneet, go ahead.
Well, all marketing companies of late, the BPCL I was looking into the counter, it has started to form some kind of a base near 480 zone, and it started to bounce back, and it has given a good amount of trading upside towards above 505 zone. So I believe that there would be a strong resistance in the range of somewhere near to 525 to 530 zone. So it can he can trail his stop loss on the higher side at 505 and wait still for the up move towards 525 zone to book his profits. So it's better to trail your stop loss higher and keep on moving the momentum higher and book somewhere in the range of 525 range on BPCL.
All right, so that's your view on BBCL. And moving on, let's also move on to the next query. And this one is from Shweta Pandey. And she has written to us on Twitter, and she has bought the Nifty 10,200 call strike at a premium of 80. And she wants to know whether or not she should book her position right now. Well, Gaurav has partially answered this question already. But Gaurav, would you like to elaborate on this particular call? I'm assuming that you would recommend holding on to the position and perhaps wait a little longer?
Well, if the buying price is around 80 rupees, if I heard it correctly, it's currently quoting at 65, 66. So clearly there's some sort of theta loss that it's already been seen. And as we know that there will be 3-4 day time value decay happening. Otherwise, the thing is that even if it trades between 20 point range, you will have a very high theta component that you will have to pay.
Raymond, that stock's seen good trend. It's seen gains of almost 2.5% and not much of build-up on the future side. Open interest only 2%. Navneet, would you recommend taking any position on Raymond? It's up 2.5%.
Well, nothing material on the data side that I can see on Raymond's. However, there has been a technical hurdle somewhere in the range of 920 to 930 zone. I would wait for another 3 to 4% of upside to take any position, or either wait for the downside again back somewhere in the range of 840 odd range. At this level, I would afraid to take a call on Raymond's long at this point of time.
All right, so a little bit cautious as far as Raymond goes, but time to move on and take the trading strategies from our guests for not just today, but perhaps the next week as well. Gaurav, I'm going to come to you. What do you have for us this time?
The first recommendation would be buy on Just Dial. At the beginning of the show, you also mentioned that there is a good amount of action that we have seen happening in the name. And since last 4 to 5 trading sessions, we have seen some sort of short covering. More or less, the stock has not moved that much. It's been trading in the range of 400, 420. 485. Secondly, buy on PFC. A consistent short portions we have seen getting built. There has been addition of 10 to 15% OI chain that we have seen in last 4 to 5 trading sessions. 130 call option has a very high OI concept. Is 130. A quick move towards 130.
Long calls for the day.
Well, one call is Tata Chemical, which I'm carrying forwarding from the last conversation that we had, somewhere in the range of VSC to breakout of 680 odd range, and now it's trading at somewhere into 720. I believe that there is a continuation of the momentum. It's making a fresh life highs, and the stock is in a very in a bull grip. I believe that the momentum is likely to continue with in the near term, and my initial targets are somewhere near to 760 odd zone, and then I place a stop loss on the lower side at 700 now. I'll initiating the buy call at this point of time. The second call is it's a kind of an early entering that I'm doing in the REC Limited. It is showing a signs of momentum. The near-term support zone are holding on in the range of 150 to 152 range. That stock has been holding up to that support zone. So it's a kind of a bounce back from a support, and I believe that there is a higher.
Recommending 4 fresh ideas to go long on. With that, it's a wrap on this edition of the F&O Show. I want to thank both Gaurav and Navneet, and also want to wish them once again a very happy Diwali. And thanks for joining us. Stay tuned to the Bloomberg Quint.